Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. In today's video, I would like to share with you guys two companies that I added to the portfolio and two companies that I've sold just this week. I'll explain the reasons why I sold these two stocks, and I will explain the reasons why I bought these companies. As always, I want to be transparent, I want to be honest, I want to tell you exactly what I'm doing, because that's the whole reason I started this whole thing. If you are enjoying this type of content, please like the video, subscribe to the channel, because it really helps. There's about 50% of you guys that watch the videos regularly, but you don't actually subscribe to the channel. So please, if you can do that, that will be really helpful, so we can reach out, inshallah, more brothers and sisters. And if you can join us on the Patreon account, that will be good, where you get access to the Discord, you get access to Sharia compliant investing ebooks, as well as to all the trackers that we have on this Patreon account, inshallah. So as always, I want to be honest, I want to be transparent. And the first company that I sold was Palo Alto Networks. And the reason I did this, and I shared the reason why, I'll put it on the Discord, and I've told the brothers and sisters there the reason I've sold at the time when I sold it. And I can tell you right now, the reason was very simple. Okay, this company basically has acquired, first of all, they have, the people that started this company were originally from Israel. Okay, as well as that, they have recently acquired a Israeli company, which I actually didn't know at the time. And when I found out, basically I was just doing a couple of research on the companies that I own in the last few days, and I found out this company just acquired not long ago a company called Dick Security whatever. And this company was basically based in Israel. I think they still are based in Israel. And for me, it just didn't, of course, based on everything that's happening right now, is no-brainer for me just to get out of this and just use that money for some other company. Okay, but there are, of course, other companies who are in the cybersecurity side of things that I'm doing research on. Inshallah, I will be sharing that with you guys. So this company, you know, when it comes to Palo Alto, is a great company, but the fact that they've, you know, what I found out based on the information I found out, just feel like I'm not really comfortable. Alhamdulillah, I took that money and I now purchased another company, which I will show you in a second. The second company I actually sold was Nike. And this one is nothing to do with politics, to be honest with you. It's more to do with the macroeconomy side, where we're at now. And I do feel like if we end up in recession, especially in the United States, especially everybody that is now, I've read around quite a few articles that are now adamant that in 2024 it will happen. Only God knows what's going to happen, but they are adamant it will happen in 2024. And this is the kind of company that suffers in the long run when it comes to in recession times, because of course their product is very expensive, and because being in discretionary items, they will not be buying Nike trainers when they can't even feed their family. So there will be other alternative companies out there or products out there that people will opt for it. And right now, although it was down quite a bit when I bought it, I've managed to get a little bit of profit, and basically I've sold it now. Again, it's a great company. Is in the long run, I don't like to see any issues with the company, but I just feel like right now there are other companies out there. Price wise has not gone up that much. If the recession happens and then there's not much of a dividend to fall back into, of course they're a dividend growth company. They have been increasing the dividends for quite some time, but I found another company that's in a similar sort of industries and is basically more discretionary than this company. So hopefully, you know, we'll see how it works out. But again, as I always say to you guys, I'm of course basically using based on my research, based on my judgment, based on my gut feelings, to actually make those decisions. You always have to make sure you make your own decisions. And please, like I've always said to you guys, I will go into a stock and then get out of it because of so and so and so. So that's why it's always important to do your own research. So those are the two companies that I actually sold. Now I'm going to talk about the two that I bought. And the first one is simple. This company has been on my radar for quite some time, and it has come down quite a bit. This is Hershey company. This is the snack company. Now, if you look at the 52-week range, you can see it's almost in the end of that. 183 was the lowest it's been. Right now is 189, so it's closer to the lowest it's ever, and it's been in the last 52 weeks. The highest that it's been is 276 $8 per share, way off where it is right now. And as you can see, year to date is down about 18%. For the 1 year, and year to date is down almost 17%, and 6% for the last 6 months is down 31%. So this is what attracted me to the company. About 6 months ago, this stock was basically in around May time. We were looking at $274 per share. Since then, it's been absolutely going down every single week. Now, they have had a report recently, and the report was actually quite good. So there was nothing in terms of their nothing to worry about in terms of their earnings and future expectations. So as you can see here, they beat actually top line, they beat the bottom line year on year, basically 11% year on year up. Organic sales was actually up basically by about almost 11%, and they've basically kind of reiterated what they said initially they will do in terms of the guidelines as well. So for that reason, I thought, you know what, this is an interesting company. I'm gonna look into it and do a little bit more research. It's been on my radar for quite some time. If you look at Morningstar, it's actually 3 stars right now. That means it's fairly valued. Okay, $196 per share is what they expect. It's about $189 right now based on this. Okay, so not much basically difference. So it's fairly valued right now in terms of that. They have a good report where they basically talked about what the company is doing in terms of the long run and where the company is right now. And of course, this company faces just the same thing as everybody else, the macroeconomic situation, if recession happens and so on. And I think this is one of the companies that will basically not be affected as much because of course their product is the snacks, is not as expensive, and of course some people will opt out and so on, but their organic sales is actually doing okay. Again, they have excellent dividends, and of course this is one of the companies that I have had it on my radar for quite some time. One of the things that I want to share with you about this report here is the fact that this company is very dominant when it comes to the snack side of things. Okay, so about 45% shares of the chocolate aisle, compared with about 35 for it is basically close to a competitor. So that, to me, that's really, really good, and that they have taken hold of that market. And then Morningstar, basically in terms of their fair value, this is what they said. They said our long-term forecast continues to call for around 4% average annual sales growth for 2023 to all the way to 32, and operating margins holding around 22%, which is absolutely huge for 2032. Okay, and then our raised valuation implies fiscal 2024 enterprise value and adjusted EBITDA of 15 times, which is absolutely fine. So to me, it's doing well in terms of the company is doing well. It's right now fairly valued. It has a wide economic moat. Their products is actually well received, and the good thing about this company is their dividends as well. They have a dividend safety of 93%. The market cap is $38 billion right now. In terms of the payout ratio, only 45%. Again, in fact, there's one more thing I want to talk about here. And this is what basically Morningstar said. They said basically we forecast 6% annual growth in its dividends over the next 10 years. Rating the payout around 40 to 40, basically 50% of the earnings, which is absolutely fine. And right now it's about 45, and so that's in that range. Okay, so 6% is actually quite good for this type of company. And then the latest increase was about 15%, and then you got the basically last 5 years we're looking at about 9%, which is absolutely fine. The last 20 years about 10%. You can see how beautifully this has actually gone up in the last few years. And the other thing is you get about $4.77 per share of this company that you own. Their ex-dividend is coming up on November 16th. So as you can see here, they're buying back their own shares. Sales is increasing. Return on equity is actually about 54% right now. Return on invested capital about 27%. It used to be higher, but now it has come down a little bit. And free cash flow margin of about 15%, on operating margins of about 23%. So wherever I look at it, basically, I feel like this company is actually doing really well. Now, in terms of growth side of it, for the next year, they're expecting almost 8%, and the next 5 years, they're expecting about 9%. So absolutely fine, no issues with that. And according to TipRank right now, it's a moderate buy, $217 per share. And if you look at it here, you can see that's about 15% upside from where we are right now. So that's the first company. And as you can see here, let me just quickly show you ratings from seeking alpha, you will see this. They're expecting about the price to be $219 per share. That's about 16% from upside from where we are now. So I really like the company. I like the dividends. I like basically the model. I like the predictability of their business as well. You know, snack companies, I don't own a lot of these companies, so I bought 10 shares of this company from the money that I actually used, basically sold the money that I got from selling Palo Alto networks, as well as I've used some of that money to actually buy Hershey. Now I'm going to talk about the next company that I added to the portfolio, and that company is Intuit. This is the company that owns QuickBooks. I'm sure you have come across. So they work with a lot of the small businesses in the United States, all around the world, not just the UK, US. So the small business and self-employment segment provides QuickBooks and services that include financial and business management, online services, desktop software, payroll solutions, time tracking, and so on. So they work with a lot of smaller businesses. And of course, one of the things that have come out recently, people said, oh, the United States is actually working on creating a software that is rival to this company. This company has already a similar sort of a product to what the United States have thought about, that is free. Right now that sort section is free, people can use it, but of course they have the subscription based side of things as well. So it's been on my basically radar for quite some time. It's not the cheapest, I'll be honest with you. Right now we're looking at about forward PE of 31. So I took the money from Palo Alto and put into this one. Both of them companies have a higher PEs. So I wanted another technology based companies, but luckily this one, after I've done quite a bit of research to find out almost all the companies that are in software side of things. So what I was looking for is, because I do own quite a lot of semiconductor companies, I was looking for software or software applications, operating system side of things, companies. And of course your Microsoft is and Salesforce is and whatever, and even if they're into cloud and so on, I wouldn't mind, but that's what I was looking for. And after doing quite a bit of research, other than the risky ones, your cloud, the snowflakes and whatever, I decided to go with a company that has a positive earnings. It's been around for quite some time, has a predictable business, is very well known products, have a product that's basically used around the world. And that's what I was looking for, and this is what I found. Okay, there's couple of other companies that are on the short list, but then this one seems to pay dividends, as well as of course they've got the growth side of it, and they do pay dividends. But right now seems expensive. But let me show you what I found out. Okay, a year to date is about up 36%. For the 1 year, and year to date is about 33% up. Or the last 6 months, we're looking about 22. So it's one of the companies that have actually gone up so much in the last few months. Okay, and when you look at its Morningstar, you can see it's 3 stars right now, which means it's fairly valued. So $522 is where it's at right now, and 500 is their fair value. Okay, so that's what they expected the price should be, and right now it's 522. It has a wide economic moat. Okay, despite people saying the US might take over this and this and this. Okay, so they definitely have some sort of a competitive advantage of whoever is in that market right now. So in terms of dividend side of it, you can see is 98% safe right now, 144 billion market cap. It has a 22% payout ratio, which is quite nice. So that means they can increase it going forward. 15% increase in the latest one, 15% increase in the last 5 years, 16% in the last 10 years. And as you can see from 2020 upwards since 2010, okay, look at that. They've been increasing every single year. That's 11 years of basically growth. They will pay you $3.60 for every share of this company that you own. They've already gone ex-dividend not long ago, and right now it looks reasonable according to Simply Safe Dividend. The other thing I want to show you is when you they're saying it's looks reasonable because of the 5-year average. So the 5-year average dividend here is 0.71, and the average is 0.69. So it is really on that line right now. Now in terms of valuation, in terms of PE, the 5-year average is basically 35, and right now it's about 31. So that's why it seems basically fairly valued at the moment according to them. earnings per share is growing massively. From 2014 it was $3 and $3.50, and right now we're looking at about $16.40, which is quite nice. Free cash flow per share is absolutely going in the right direction, which is absolutely huge, from $4.42 in 2014 to right now 17.6 or $17.60. Now earnings per share growth is basically has declined tiny bit in the last few months. In terms of shares outstanding, is actually they've diluted their shares here and there, and I think they probably acquired other companies and so on, but the last 2 years have basically stayed the same. But this time last year, 2023, they actually bought back some of their shares, and I hope they continue doing that, okay, because it's really, but right now it seems expensive, so I wouldn't do it. But if it goes down maybe another 10, 15, 20%, then it'll probably be about a good time for the company to buy back more shares. Total sales, as you can see, has increased massively. Return on invested capital right now we're looking at about 14%, and return on invested internal and equity is about 14%, return on invested capital or about 13%. Operating margins is actually 22%. Free cash flow per share we're looking at about 34%, which is absolutely huge, probably one of the best out there. Now in terms of growth side of it, next year they're expecting the earnings to grow about 14%, and then 14% every single year for moving forward. And this is one of the reasons I actually decided to add to this company to the portfolio. Because of those double-digit growth, you're gonna have to pay some sort of a premium, right, for this stock, and that's why right now I'm paying forward PE of 30, whatever it is. But when you look at this, okay, it looks like it's almost a strong buy. So there is basically 8 people that said a strong buy, and then 3 that said it's a buy right now, and then 11 that was saying it's a hold. I was in this camp not long ago, but when it comes to the hold side of it, but right now because I had to sell Palo Alto Networks, I feel like I'm just going to start nibbling and buying a little bit more of this company. The average price is $533 per share. Currently is the $522 per share. If we look at tip rank as well, as you can see here, is a strong buy from them. There's a 24 people rating this, okay, and right now, as you can see here, is $580 per share. That's about 11% upside from where it is right now. And what did I do? I bought 2 shares of this company. Of course, the price is a little bit expensive, so I don't know if you noticed, by the way, from now on, I'm gonna try not to buy fractional shares. So 10 shares of Hershey, 2 shares of Intuit. That's what I bought so far. So there you have it. Those are the 2 companies that I bought. The reasons I bought, I hope it basically makes sense, okay. And again, I don't buy these companies if you're not comfortable, if you don't know their business model. It took me a few days to actually do the research and basically make that decision, because I knew I'm gonna have to sell Palo Alto Networks. And then I was looking at the portfolio, and Nike seems basically the one company that I was a little bit worried moving forward with if a recession happens and so on. So I decided to get rid of it and buy Hershey, and I got rid of Palo Alto and bought into it. And I'm going to continue buying the both companies. Inshallah, I'm hopeful that they will come down quite a bit so I can add more, because I can see myself holding these companies for a long time, inshallah. And again, as always, of course, I can change my mind. Things can happen, but please always do your own research, inshallah. I'll be doing a lot more videos, inshallah, in the next couple of days. So if you like this type of content, please like the video, subscribe to the channel, join us in the Patreon account. It really genuinely helps the channel, and it keeps me motivated, inshallah, to carry on and so on. So have a wonderful day. Assalamu Alaikum.